Hey guys, welcome back to my YouTube channel. So today's video is going to be sort of a market update and sort of let you guys know where I currently stand in this current market. So as we all know, as I mentioned in my previous videos, we've had a fairly good rebound of the S&P and in fact all the other average indices as well, such as the Nasdaq and the Dow Jones, about 10 to 15% across the board on the indices from its bottom that we had roughly in Christmas period. So for me personally, as I've mentioned again in my previous videos, it is definitely still a time to be cautious because in bear markets this is quite common. You get the drop, suddenly sometimes 15-20%. You get a good rebound, but that sort of signifies that we are in a bear market. Now, obviously, nobody can predict completely whether this is the start of a recession or not. But, if you look back at history and see in 2008, you could definitely see before we had the bottom in 08, in 07, I believe, when the markets were having its turmoil, we had a 20% decline, 10 to 15% upside, and then all the way back down again to end around 50% from its peak. So because of that, I am actually now short the market. I am shorting all the indices. I am shorting the Dow Jones, the S&P 500 and the Nasdaq. Now this is not to say for people to go out and actually go and short these indices. I'm not here to sort of tell you what you should and shouldn't invest in. It's more about what I'm doing and how I'm seeing the markets, and for you to then use my viewpoints to also add it to your investment thesis in terms of whether you it's a pro or a con or completely ludicrous what I'm saying for your investment thesis or not, and sort of just help you give advice and sort of help build the bridge, as I said, between retail and institutional investors. And one of the main reasons also for me being very bearish now on stocks is because of the US 2-year and 10-year. So for those of you that do know, these indices are these treasuries are normally a great leading indicator to let you know when the start of a recession could be happening. Now we have had a yield curve that's been inverting for some time, and it could be something that, again, like we had last year, just proves to be wrong and we have an uproar again, hit new highs again. But for me personally, as you can see here, the US 10-year and the US 2-year, we have about 15 basis points difference. Now if you look at the peak in 07, you could see in 06 and 07 that the US 2-year and 10-year did have a difference of 20 basis points in those periods too. So that's sort of just adding to my conviction, because with indices it is a lot about, well, obviously when you decide your entry points, it is pretty much mostly technical and fundamental if you're taking a long-term horizon, whether you want to get in the index or not. So at the moment, the reason why I'm choosing these levels is because of the technicals, and the main reason being, like I've mentioned, that if you go back and check, it's the same thing here. We've had a 20% decline, and then a 30% upside. So for me, it's a perfect time for me to get in on a short position with my stop at around 3,000. So at all new all-time highs. You could potentially keep your stop at 2,800 for some people that might be wanting to do that. So that's what, around a 10% stop. I'm keeping mine personally at 3,000. It's because I manage risk well. So I am aware that if it does go against me 20%, I can still bottle that volatility and still hang in there. And I am quite on the conviction scale above 5. If it's out of 10, above 5, that I do believe this is the start of the bear market, and that's why I'm actually short these indices. Now nobody can obviously ever accurately predict these, but this is just something that I am currently, my mind is on, and I am actually short the indices. And so, speaking of that, other ways that you could sort of protect yourself if obviously you're a long only investor and you don't want to short and you never shorted, so I wouldn't recommend going out and just shorting, because there's a lot to understand. and I have explained it in one of my previous videos, which I'll leave the link in description, about what is actually shorting. And also I will hopefully put this video that I talk about silver and gold on the top right, and the reason being is because, like I said, for those long only investors that do not like to short the markets, the way that you could hedge your portfolio is by buying into gold and or silver. Now, I've mentioned this in my videos before. I'll leave link in description and hopefully in the top right of the video. So I got in at levels, I believe, about 14 and a half. It was in my previous video, so something like that. And obviously we've had a good run up as predicted. We've had obviously a bit of a decline, which is normal. Nothing goes up in a straight line. And let's just see what the decline was. So we had a 5% decline, but then since then we've also now been going back up. So again, these are just great hedges to have in your portfolio, and like I mentioned, gold and silver is a place to be. The reason why I'm more in silver than gold is because the idea being is that when precious metals do end up having a rally, gold is something that's always looked upon, so people will always be buying gold. But because of that, you won't get those major upside swings, whereas because precious metals is going up, you'll get other baskets of precious metals also going up, so you'll get just a big jump in silver, whether or not it's not really even supply demand issue at that point. It's more about just the sentiment that, oh, we want to buy precious metals as a way to hedge. So yeah, so that's also could be another perfect opportunity for the long only investors, is to look into these safe haven assets if you do not want to obviously short, and I'm not recommending to short either. But yeah, just sort of give you an update. So be cautious going in this market. If you were one of the lucky ones who did end up buying at the bottom of the market, it could be a good time to take some profit off the table and sort of see how the market plays out from here on. And like I've mentioned also before, that February is a very volatile month historically, so it will be interesting to see what happens in February. I am, obviously, because I'm bearish on stock, expecting and hoping it will be on the downside, but you never know. But anyway, I hope you enjoyed this video, and I look forward to seeing you guys in the next one. Bye.